2024 is ending. US and Australian stocks performed well, which predictions came true in 2024. What stories will develop in 2025? What 2025 uncertainties might impact the Australian market? I'm Andy Wong, Asia Pacific Investment and ESG Director at Solomon's Group. This tutorial is an investment advice. Consult a licensed professional. Subscribe for more videos. So yes, which of the many uncertainties in 2025 may affect the Australian market? Well, hello everyone. If you have related questions, remember to pay attention to our teaching sharing in this episode. I'm the Asia Pacific Investment and ESG Director of Andy Wong Solomon's Group. So in our teaching sharing, there is no investment advice. But if you have any questions, remember to ask some licensed professionals, and one suggestion is to remember to subscribe. This is a YouTube channel, and keep an eye out for our romance videos. I've been collaborating with SBS Chinese Radio in Australia, sharing insights for over a year. There are many investment opportunities in the Australian market. We've shared tools and educational content. If you have questions, want to revisit topics, or suggest future ones, leave a comment. Now, let's start with key analysis from 2024. This year, the market often mentioned economic struggles, expensive stocks, and risks. Concerns about the US elections posed high risk. So, in the program, it's kind of turned into an O-Stock 101 vibe. If you have any questions, want to revisit something, or even suggest topics for the future, make sure to leave a comment here. I'll take those related questions and maybe discuss them with SBS Chinese Radio, and we can see if we can do some educational shares on those topics next time. Recap key 2024 analysis. This year, the market said the economy is weak, stocks are expensive and risky. Concerns about US elections, Trump's possible election, risk. But over the past year, US and Australian markets showed positive trends in economy and profits. So, buying on dips seems wise. You might wonder which Australian companies are promising. ESG companies in Australia, even with overseas operations, are worth a look. Comparing shows these sectors outperform the market. The midline is a good situation, so I think it's a bargain hunt. Is it better to think about it one by one? Promising Australian companies, ESG firms, even overseas, merit attention. They've outperformed the market. This year, predictions needed adjustments, especially the Reserve Bank of Australia and interest rate cuts. Revisions suggest cuts might occur in the first quarter of next year. With high interest rates, signs of cooling in the real estate market may appear. This year, we had to adjust our analysis and predictions, especially about the Reserve Bank of Australia's interest rate cuts. Initially expected in December, we revised to mid to late first quarter next year. The Australian dollar's range against the US dollar is lower than expected. High interest rates may cool the real estate market, but it should still grow steadily. In the fourth quarter, Sydney and Melbourne show signs of slowing growth. The Australian dollar, that is, the trend against the US dollar, even if we are here, we see that it is in a range, but it is not within that range. We expected that range to be so high, yes, it's one level lower, so on the other hand, it's okay if you still have it. Everyone will think that when the interest rate in Australia is so high, there may be some signs of cooling down the real estate market. In fact, we all think that the real estate market in Australia will continue to develop steadily, but something will appear for the first time. We are all seeing signs of slowing growth now that we are entering the fourth quarter, even in Australia. What about the real estate market, especially places like Sydney and Melbourne? There is relatively little growth, but there is a slowdown.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
Let's review stories previously discussed on SBS worth noting. Firstly, we discussed changes in immigration policies impacting student visas. We then discussed a company called IDP Education, ticker symbol IEL. The macro environment was negative. IDP Education, sensitive to these policies, was still seeking growth momentum. We thought it might take time to monitor it again. This year, the stock price dropped over 30%. Everyone should watch for changes in immigration policies or student visa regulations next year. It's still a pretty negative situation, especially for IDP Education, which is sensitive to these immigration policies. The growth momentum seems to still be searching for a bottom, and at that time, we felt it wouldn't be quick to keep an eye on it again. So, this year, the stock price has actually dropped by over 30%. So, everyone should be aware of that. So, one thing to keep an eye on for next year is whether there will be any changes in immigration policies, especially regarding student visas. Gold prices. In 2023, we were optimistic about gold. It's still a buy on dips. Gold rose 30%, but the macro landscape is unchanged. Central banks continue with monetary policies. Interest rates peaking support gold. ESG concept. Overseas income boosts growth. Covered in SBS. However, in fact, the price of gold this year is still a bargain hunting situation. In fact, our current view has not changed from what we have shared in the past. I think, okay, even if it rises by about 30%, it will be like this year, but it is in the overall picture, the macro pattern. Even if the world's central banks are still able to continue to print money in India, they will continue to buy gold for reserves. That's it, Xiong. High rates are part of the macro environment for gold prices. No changes expected. ESG is crucial for growth. Revisiting Brimble, it transformed from goods transport to eco-friendly raw material production. Integrated IoT enhances logistics and cost efficiency. Management balances ESG with development, creating synergy. Brimble is now a focus for global investors. Let's talk about Brimble. This company, I shared it years ago in Hong Kong. The topic seemed dull then, but the company transformed its transport business into eco-friendly raw material production. They integrated IoT to enhance logistics software and improve client cost efficiency. The management focuses on balancing ESG with business development, creating synergy. This made Brimble a company global investors watch this year. Brimble is a successful ESG model over the years. In the medium term, if we avoid short-term focus, ESG excelling companies will benefit. Their software system aids clients, boosts cost efficiency, plus the management team is balancing ESG with their business development, forming a synergy between the two. This has made Brimble companies global investors are keeping an eye on this year. Speaking of ESG success, Brimble has become a model. Under a medium view, if we don't just focus on short-term changes, companies that excel in ESG will keep benefiting. REA Group, realestate.com.au is familiar to both Australian and Hong Kong investors. I shared insights about this company during seminars in Hong Kong. Their business benefited from the real estate boom in Australia. Speaking of a successful example of ESG, Brimble has become a model over the past few years. I believe that under a medium-term perspective, if we don't just focus on short-term fluctuations, companies that excel in ESG will continue to benefit in the long run. Alright, another example familiar to many investors is REA Group, known as realestate.com.au. I shared insights about this company during seminars in Hong Kong. Their business benefits from Australia's booming real estate market, with technology playing a key role. They're also expanding into markets like India as part of their growth strategy. They have technological elements and overseas growth. While this stock has risen this year, its valuation might be expensive, posing potential risks next year. These stocks were discussed on SBS, and we're recapping them here. If you have questions, feel free to ask. In addition, how can he deploy some of his company's resources to the development of other places, such as India, etc.? So in this scenario, it is consistent and has technological elements. We also have overseas business growth is at a certain level. So I believe that, of course, even if everyone may pay attention to these stocks from time to time, the value of these stocks has risen more this year. So the value of these stocks will be a little expensive. Maybe this will be the case next year. There are some risks to be aware of. So to recap, the stocks we talked about have been on SBS. If you have any questions, ask. We're showing future possibilities. I consider global multi-asset investments, including stocks, bonds, and alternatives. This year, despite stable Australian interest rates, we discussed Australian bond ETFs on SBS. I find Australian bonds attractive globally. There's more to discuss than just stock. I focus on global multi-asset investments, including stocks, bonds, and other alternative investments. While interest rates in Australia haven't been cut yet, discussions on Australian bond ETFs covered in SBS. I find the potential of Australian bond instruments attractive globally. We reviewed many stocks and concepts, so what to watch for the future. Macro picture. Key points for 2025. Watch if market volatility will increase in the coming year. In 2024, many felt buying and holding was enough, but will next year's volatility be as low? If it rises, what then? I think it is so in the global bond market. In fact, the bonds of Australia and Australia are instruments. Even I still feel that way. The potential is quite attractive. We've reviewed stocks, now looking to 2025. Will market volatility rise next year? Will next year's volatility be as low? If it rises, how will it affect our mindset? US tariffs and policies. How will they be implemented? This could influence the Australian dollar. Will signs of a slowdown in the Australian real estate market intensify? So, regarding your own mindset, should you be prepared for that? Also, what about the US tariffs and policies? After Trump takes office again, how will those be implemented and developed? This could really affect when the RBA might cut rates again, and it might also influence whether China's stimulus policies will be effective or if they need to ramp up efforts. These factors could impact the movement of the Australian dollar. So, of course, if there are gradual changes in the macro environment, will the signs of a slowdown in the Australian real estate market intensify? Or is it just a matter of slowing down a bit, while still maintaining a pretty bright outlook? If you have similar questions or any other inquiries, feel free to leave a comment below. We might even discuss them with you on YouTube in the future. We'll continue to keep everyone updated through other media as well. Thanks, everyone.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.